Hey everybody, welcome back to the Boomer Real Estate Podcast. Now you hear a lot of millennials griping about how difficult it is to buy a home right now.
Yeah.
But what they don't realize is that real estate's all about finding the right time to buy, which in my instance was 30 years ago.
People always ask me, Bill, how'd you time the market so perfectly? And for me, I knew the exact time to buy was when I turned 27, just got married in 1990. I was working at the GM plant.
Forecasting the real estate market. After the boomer generation, we'll talk about how the aging of the baby boomer generation, the richest and largest generation to date, will affect the real estate market in this conversation. This is a critical juncture for the market, with the oldest boomers currently in their 70s and the youngest in their 50s. We'll examine potential alterations that could occur from this and how they might impact the real estate market going forward. So, relax and let's dive into an exciting and informative video. Being middle class has become obsolete. The only thing that matters is whether or not you own a home. Your current residence is statistically wealthier than yours, and for many young people, a gift from a relative is their sole opportunity to make ends meet. So the question is, what will happen to the real estate market when the baby boomer generation passes away? Considering the Federal Reserve's efforts to control inflation, there are two challenges facing anyone looking to buy real estate right now. They appear significantly more expensive in areas where properties are typically expensive. Most first-time house purchasers now view housing to be a luxury that they cannot afford. According to an old proverb, now is the second best time to start investing, with the best time being 30 years ago. However, such conventional wisdom might not hold up in the current economy. Purchasing a home when it's right for you and your family can lead to long-term financial security. That's all. The timing was perfect while you were still a student. If you try to buy a house right now, you will be taking on record high mortgage rates, record high costs, and record low supply. People sell their houses for two reasons: necessity and desire. Since the majority of Americans were able to lock in historically low borrowing rates, no one who already owns a home wants to sell. The interest rates on the new mortgage will triple for a house of equal worth if they sell their current one and buy a new one. According to data from the National Association of Realtors, 87% of new home purchases are financed, and the average down payment for a first-time home buyer is just 7%. That suggests that it is best to avoid higher mortgage rates at all costs. After crossing state lines, homeowners would proceed to rent out their residences and then relocate to another rental property, according to a Wall Street Journal story. All those who are looking to sell their home are waiting for interest rates to drop. Everyone who wants to buy a house is also waiting for interest rates to drop. Renters also have to deal with homeowners who are unwilling to sell their property because they have secured a good mortgage rate. Real estate players are enmeshed in a Mexican standoff, while renters are forced to battle with a banana. Those who simply want to purchase a house have no other option than to purchase it from someone who needs to sell it. The National Association of Realtors revealed that the average age of American home sellers was 60 years old.
And so instead of buying avocado toast, I went ahead and looked at the landscape and then was purposely born 30 years prior to that into a generation that had a much better wealth creation engine.
One of the reasons they have to sell their homes is that people die at that age. I'm here to do what I do best though, which is shatter your illusions with real data. If you're thinking that the largest generation to own a home in American history will make it easier for others to acquire their first home. If older generations permanently exit the above-ground real estate market for three reasons, buying a home won't get any easier. First, they might take it with them when they leave. The gap between homeowners and renters widens as people get older. Based on data from LendingTree, 8 out of 10 Americans over 65 who own their own home only have a 19% mortgage. The fastest growing reason why people are selling their homes is not because they are dying, but rather because they need the money for retirement. According to a poll conducted by the Washington Post, the median yearly cost of nursing homes increased from $65,000 in 2004 to $108,000 in 2020, the year the piece was published. Because nursing facilities are one of the asset segments that private equity firms like Blackstone and Bain are investing in at the quickest rate to increase their real estate profits. Conditions there have also been getting worse. Blackstone and the real estate investment trust Welltower reached a $745 million deal in 2017 for Blackstone to purchase Welltower's portfolio. of 3,400 senior living apartments. Although Blackstone is extending its interests, other private equity firms that have financed billions of dollars straight into senior living are significantly larger than Blackstone because they appreciate the value that this investment brings. By cutting costs and raising prices, these companies have generated exceptional returns from real estate developments that cater to the growing senior American market. Compared to most Americans, fewer can afford to retire on an income of $108,000 annually. Many are selling their homes to raise the money needed to pay for these services. It's overused to argue that private equity has been snatching single-family houses from normal families, but they've come to learn that they don't even have to be the owners to profit from their worth. The most expensive aged care facilities are found in areas with higher home prices because the older residents of these areas can afford to pay for them. After selling their homes, those who are unable to cover these expenses rely on their friends and family, in addition to insufficient social security, in case they become incapacitated. About 10% of American adults provide some type of care to another adult, usually their aging parents. According to Jan Muchler, director of the University of Massachusetts Gerontology Institute, adult children who take on caring responsibilities frequently have to give up other things as well, such as their employment. Therefore, it's unlikely that boomers passing down their homes to their offspring would result in them profiting as much as they want. Since the average age of a first home buyer in the USA is now 35, up from 30 in 2010, many people are waiting to buy their first home until they have paid off their school loans, advanced in their jobs, and saved for a down payment. Hence, it's unclear if they will receive an inheritance from their baby boomer parents. Furthermore, because private equity firms have been buying the homes of elderly people who have passed away and have reverse mortgages, they might receive inheritances before the beneficiaries.
But you'll notice a lot of millennials are too lazy to do that, and they just end up being born when they're born.
That's a huge mistake.
Yep.
And look, you need to have the discipline to make sure that your generation encourages government policy to drive the prices up to increase your wealth while suppressing the wealth of the next generation.
These companies take advantage of a clause in the mortgage agreement that permits them to purchase the houses at a reduced price if the loan cannot be repaid in full. Between 2009 and 2019, these programs helped to explain a 14% decline in the percentage of 35-44-year-olds who own their own home. Furthermore, many baby boomers have reverse mortgages on their homes, which makes it difficult for their heirs to inherit anything, according to Michael Hiltzik of the Los Angeles Times. With a reverse mortgage, a homeowner 62 years of age or older can turn a portion of their home's equity into cash, typically in the form of a credit line. Upon death or move out of the residence, the remaining loan balance and associated costs become due. As a result, the equity in baby boomers' homes may be rapidly depleted by those reverse mortgages. In response to a problem with home ownership brought on by an average down payment of 7%, banks, non-bank lenders, and the government have launched new financial products such as the Federal Housing Administration loan insurance. Zillow intends to provide financing with a 1% down payment. Redfin claims that the new products will only help those who already own several properties, namely baby boomers with $18 trillion in real estate. The situation can get worse as a result of the new offers, making it harder for first-time homebuyers to enter the market. The majority of newly designed home lending products targeted at first-time homebuyers have loan size limitations, which drive up the cost of repayments overall by inflating the price of once affordable homes to the point of no return. While repayments must be made monthly for 30 years, down payments are one-time expenses. A buyer's ability to make monthly payments does not guarantee they can afford the loan. Baby boomers benefit when new buyers with dubious financing arrangements end up in debt because they bought their homes when they were only worth a small portion of what they are now worth. Therefore, age is not a deciding factor when purchasing a home. A Bloomberg story indicated that many people with adult children are utilizing their retirement assets to help their children struggle to finance a home. A few children may inherit many homes from some families, while others may have to make financial compromises. Those who can't help and those who need support will be further behind when assets are passed down from older generations. This implies that when baby boomers pass away, there won't be an abundance of newly built homes available. In 2017, there were more deaths than births in more than a third of American counties. In certain regions, regular families were replaced by older retirees, such as the rich population in Florida. The remaining homes in these areas lack the amenities that retirees avoid purchasing as first-time homebuyers. Although inherited properties can be sold or rented, there won't be a supply in an area where a first-time homebuyer wants to buy. According to Harvard University's The State of Housing, institutional investors are focusing on cheap homes in the Sunbelt, which offer a strong risk-adjusted return on investment and account for 13.3% of all residential sales. A National Association of Realtors research indicates that a sizable portion of purchasers in Sunbelt counties are institutional investors, possibly leaving baby boomers' homes in the hands of affluent individuals or investors. The report suggests no sign of Fing laser eyes. More educated people are falling for scams in 2024, hoping to escape the rat race. Historical evidence reveals this is a recurring theme during terrible times. We hope that our conversation was instructive and insightful for you. We can all make smarter decisions regarding our real estate investments and get ready for the changes that lie ahead with our newfound understanding. As usual, be curious and maintain an open mind, and we'll see you in our next video. Kindly subscribe, like, and share our video. Also, remember to turn on the notification button to know whenever we upload new videos.